Hey, hi, this is Krubakaran Rajendran, founder of algo trading firm squareofbots.com. In this video, we're going to talk about an option buying strategy where the underlying principle of this is going to be based on opening range breakout, where you track the overall market movements for initial 15 minutes or 30 minutes or 1 hour. And once any kind of range breakout happens on the upside or on the downside, you buy the respective call options or put options. So if you apply this logic with respect to all 5 indices, Nifty, Bank Nifty, Fin Nifty, Mid Cap and Sensex, what would be the overall results looks like? That is what we are going to see today. So we'll use the algo test platform to backtest the results for all 5 indices, and then I'll explain you how the overall results looks like if you have taken the first 15 minutes range breakout, or if you have taken the first 30 minutes range breakout, and if you have taken the 1 hour range breakout. Out of all these three, which one would really work well? So these are the things which I want to address today. So let's take this example. So this is a 15 minutes chart of Bank Nifty spot, where we will first observe how the Bank Nifty is moving for the first 15 minutes and check out their high and their low. If their high is broken, if that particular level is broken and market goes up, we are going to go long. If that particular 15 minutes range low is broken, we are just going to go short. So in this example, you can clearly see the first 15 minutes range was broken here, the next candle. So we will be going long, and the stop loss for that will be first 15 minutes low. This is the normal approach towards trading based on ORB. So what we are going to do is, since we are going to trade based on the underlying, instead of buying futures, we will buy the respective call option or respective put option. If market is breaking out on the upper side, then we will buy a call option. If the market is breaking the first 15 minutes range low, then we will buy the put option. Instead of using a stop loss of 15%, 20%, 30%, we are not going to use any stop loss based on the premium. Instead, we'll be going to use a stop loss based on the underlying. Say in this example, the market has gone up and then given a buy signal, right? So our stop loss will be the first 15 minutes range low. If market reverses and goes below this level, we will exit the call option and we will buy the respective put option. Similarly, if market goes down and the respective put option has been triggered, in case if market is reversing up, then the first 15 minutes range high will be considered as stop loss. This is how the overall design of ORB system is. So based on this logic, if we trade with respect to call option and put option, what would be the overall results looks like? Let us look into that. So we'll use this algo test platform. Just go to algo test and create backtest, and I've selected the underlying instrument as Bank Nifty, and I've given entry time as 9:16 a.m. and exit time as 3:15 p.m. and it's going to be intraday, so select intraday, and I've selected buy and call option, and I've selected ATM options, and I've selected range breakout here, where the range breakout time that I've given is 9:30. So from this start time till 9:30, it will consider the range. Similarly, I've given the same thing for put option, and if the range low is broken, since we are using underlying, if the range low is broken, we are going to buy put option. If the range high is broken, then we'll buy the call option. So we'll use underlying and underlying here. And for the stop loss, you have multiple options like choosing based on premium percentage, based on points and everything. Since we are going to trade based on the ORB range, so we'll be selecting the range. So as I said in the earlier example, if the first 15 minutes range low or high of the underlying is broken, this system will exit from the trade. And that's all. Once you give these parameters, so I have replicated the same for Bank Nifty, Nifty, Fin Nifty and all. And then I have run as baskets of strategies to give the final output. So let us see what is the overall output for this specific strategies. So this is the overall results looks like if you would traded all 5 instruments, and this is the backtest results from 2017 to 2024, and overall it has given approximately around 7 lakhs of overall profits. And this is the overall drawdown cases. So overall I have included 0.3% of overall slippages. So if you trade all 5 instruments, you end up making almost 6.71 lakhs of overall profits, including of 0.3% slippages. So if you could see, the maximum drawdown is almost 2,19,000. Most people do option buying directly for 40,000 or 50,000. But if you could see here, the maximum drawdown itself is 2.2 lakhs, which means that if you trade with 50,000 or 60,000 of capital with any kind of option buying setup like this, you are definitely going to wipe out your capital. So you always keep in mind that such kind of higher drawdown is totally inevitable when you're trading with option buying system. Increase the overall time frame. Instead of 15 minutes, we can increase it to probably 1 hour. So 9:15 to 10:15 wait and then initiate a trade, so that the initial 1 hour volatility of ups and downs zigzag you can totally avoid. So if you trade based on the first 15 minutes range breakout, instead of that, if you trade based on 1 hour range breakout, what would be the overall results? Let's check that. So this is the result for the 1 hour range breakout instead of first 15 minutes. The returns are relatively much better, where it has given more than 8 lakhs of overall profits, and the drawdown is also consistent. You're not seeing significant drawdown, no any sharp drawdowns. So mostly the drawdown is less than 1 lakh, and this is the yearly returns that you could see, like last years and prior to those other years when market was really trending, it has given good profits. This year specifically, it has given very good profits. So far it has given almost 2.75 lakhs of overall profits, and that is including of 0.3% of overall slippages. So if you are trading all 5 instruments, you end up making almost 8.6 lakhs of overall profits, where the maximum drawdown is only 1 lakh. So it is less than half of what we have seen in the earlier example. So relatively best, instead of 15 minutes range breakout, the 1 hour range breakout has really given you a better results. There are two things that you can keep in mind based on the whatever the examples that I've shown. First thing is, yes, option buying works, but it works with a very bigger drawdowns. So if you are trying to enter based on the first few minutes range breakout, obviously it is going to end up in higher drawdowns and higher trades and higher slippages. But similarly, if you apply the same logic, instead of first 15 minutes, if you wait for the first 1 hour range breakout and then if you enter into a trade, that is giving you a much better results. And the final thing is, when you are trying to design an option buying system, try to design based on the underlying principles. Observe how the underlying moves. So instead of trying to apply any specific logic like, okay, if the specific option strikes moves 15% or 20%, I'll get into a trade. Instead of that, try to observe the overall underlying price patterns. If the underlying makes certain movement, then buy the respective call options or put options. By using the stop loss based on underlying, you will try to avoid these kind of false breakout moves, and also your stop loss will not get hit so easily because your stop loss is based on the underlying. This is what I want to convey in this video. I'll see you guys next week with another topic. Bye.